And we are live. Welcome, world. Welcome, Texas and Louisiana on the Smart Money Culture Network. Welcome, everybody else joining around the world on X, YouTube, and LinkedIn, and all these other places. We're here. Last day of Paris Blockchain Week. I was just talking to Randy about it. I don't want to leave. I just want to. I just want to stay. I just want to stay.
Yes.
That's too much to ask.
Go buy us a family condo over there.
We need a family condo. It's funny you mentioned that because Randy and I both were looking at some of these places and I wonder how much they are. It's all so beautiful. I mean, it really is just so pretty. I don't know what we did to ourselves to start building such ugly buildings in a lot of the West because, man, we had it figured out. Nobody builds more beautiful buildings than us. I mean, sculptures, they're just on the inside and the outside. And then really the people too. I mean, I think a lot of it has to do with the amount of people that we have in places like New York City and stuff like that. But I mean, it's very clean. It's very clean here. You don't have a lot of bums. There's a lot less people. That's kind of what we decided. There's a lot less people.
Yeah, I mean, also in places like New York and our big cities in the U.S., we encourage the ruckus. We really encourage each other to be bad, to be obnoxious, versus a lot of Europeans. I notice that they tame each other a bit more.
We're Americans. We're Americans. That's what I tell everyone. We're Americans. Yeah. David, I need a haircut. Anyway, yeah, it is. It's very beautiful. We went to the shoe party last night. We were media partner there as well, and they had, man, you would have loved it. Steaks, lobster rolls. Just us. It was great.
Yeah. Well, the food in France is also spectacular.
The food in France is spectacular. It's true. And actually, the people are really nice too. I mean, I know how to deal with them. So, occasionally, Randy, he had some guy be mean to him or something. I mean, you just got to know how to deal with them. In general, the French, it's not like they like you worse than they like anybody else. They just don't like anybody. So as long as you know that, it's not about you. It's not about you being American. It's just about you being you. You being somebody else. Oh,
yeah. It's impossible.
It's impossible. No, it has been a really great event. And speaking of really, I mean, overall amazing experience, and as well dealing with the Paris Blockchain Week staff has been absolutely amazing. We found out last night. I'm going to play for the last segment, I think, if we have time. We'll see how it is with what Matt has to say. He probably has a lot to say about the inflation numbers that just came out. But there is, we interviewed Lou Kerner yesterday. So I have a 12-minute segment. We might play him on the end. We might not. I might pick another day to do it. But Lou Kerner is the founder of Crypto Mondays. This guy, people think that David and I are well known and, this and that. We have a big network. Man, this guy, Lou Kerner, he started Crypto Mondays. Crypto Mondays are all around the world. And actually, he told us on air yesterday as we were filming that Paris Blockchain Week actually started with Crypto Monday. And so he's actually every year he gets the, carte blanche. They have him out here and he does some panels and gets his VIP and everything like that, because it really started. He was the one they started that week, and it would kick off with Crypto Mondays, and now it's in its fifth year of Paris Blockchain Week, and really, like I said, wonderful event. Interesting, since I'm talking about it, interesting thing about maybe this event and maybe just some other events. Very much a business event. It's very, very much a business event. Not so many of the, fluff types running around. it was $1,000. It was 900 euros for a minimum ticket to get in. I think it was 3,500 for VIP. So it's that keeps a lot of the riffraffs out. But yeah, very much a business event. A lot of great interviews that we're going to bring to you over the next couple of weeks. A little bit of a different, now that we have the TV show, a little bit of a different, we always used to just go live, but now we integrate it into our live show one by one. So those are going to be really interesting a lot of 12-minute segments as we push them forward. So the world, of course, is on fire. Of course, Brazil and Elon are now dating, I guess. It's like that crazy girlfriend that you had, right? She hates you, she hates you, she hates you, and then get on the phone. And so now they're dating, or they're talking. I guess from the sounds of it, someone can tell me I'm wrong, but from the sounds of it, he's going to follow the law, which is always what he said, right? He said that X is always going to stand for free speech as much as possible, but they're going to follow the law. And if the law is saying that they have to censor these people, I could be wrong, but it looks like that's what's going to happen, unfortunately. I don't know. Maybe I'm wrong. But he had a 2-hour call with the Brazilian team there, and we'll kind of see what comes out of it. Pretty interesting situation we have over there.
Yeah, and Elon's really willing to negotiate and work with leaders and try to bring the world to a more peaceful situation.
Peaceful, and guys, we have to talk to each other. Like we have to talk to each other, and we have to figure out a way forward. And in order to talk to each other, you have to have free speech. And of course, sometimes you gotta hit it out. I guess. I'm sure you heard, David. They're drafting another 100,000 or something like that, guys and women, I think, in Ukraine. Of course, that is after Russia is also now pushing or drafting another 100 or 200,000 or something like that.
Yeah, I really didn't mind not reaching for that Ukrainian citizenship, as they may have been wanting to draft me.
Yeah, right. So David was hanging out in Dubai, living the high life. I said, David, why don't you go to Kiev? Kiev is nice in the summer. Go to Kiev. So we did, and the rest is kind of history. But you were out of there before that. But yeah, it's not hard. It's not hard to get one. But yeah, you don't want to be over there, man. That the meat grinder, as they call it. I mean, those poor guys and girls. It's just horrible. And then you have the general, one of our top generals in the U.S. is headed over to Israel right now. He's probably already there. And so he's going to be coordinating the response of Iran, which is so funny to me. Like, Iran is so kind of funny. I mean, I'm not making fun of anybody, but they're like, all right, we're going to hit you back. We're going to send drones and we're going to send missiles. Like, why would you telegraph what you're going to do?
Yeah.
I don't get that. I don't get that. Oh, got it. So that's yeah. That's what they do, right? So
yeah,
that's all kind of interesting. The inflation numbers are high. You got that sticky inflation. We're going to talk more with Matt about that. I got some people wanted me to come on a radio show yesterday and talk about it, so I knew it was hot. We're a little bit removed as we're over here, you know what I mean? Censorship is it's really on the mark anyway, you know what I mean? It's just like censorship all over the world. Of course, you have it here, you have it in the U.S. One of the main things, I mean, that's really how they got rid of MAGA. I mean, maybe MAGA will come back, but that's really how they did it. They did what they did, and then they made everyone shut up about it. We weren't allowed to talk about it. You know? And this censorship that is gripping the globe, this is very, very worrisome. You know, this is like, someone was saying yesterday that the Gestapo would be proud of what Brazil is doing. You know? It's very, very important for people to be able to speak freely. I would also argue it's very important for people to be able to be armed and everything like that. But most important, really, is you have to be able to talk. You have to be able to criticize. You have to be able to talk freely, or you're nothing but a slave. And none of you guys, nobody watching, should be okay with being a slave. It's not a slave. So, anyhow, let's see here. Oh, 09. So from here, a couple other things as well. Just talking about, we have from here, I will head back home. We may go over to Dubai. Token 2049 is sold out, by the way, but of course we'll be able to get in. So we may head out to that, or we might just wait. But that sounds, Token 2049 sounds like that's going to be a major, major event over there. It's going to be awesome.
Yeah, big time. It's been one of the biggest, and now it's back in Dubai, sold out crowd.
Sold out. Like,
yeah, well done.
Sorry. Yeah, well done, guys. Like, sorry. I mean, Token 2049, it has always been kind of one of those things. I do definitely want to make the round. So, you know, we also have the Monaco Grand Prix coming up as well. I've gotten a bit inspired being here, David. I got to tell you, we need to go back to Monaco. We need to rent another yacht, watch the Grand Prix,
drink some proper
make a bunch
12,
of money.
Some proper 12. Yes.
Drink some proper 12 with our friend McGregor. He's so funny, right?
Well, with this market fluctuation, I think it's going to be possible. Bitcoin back over 70,700 right now.
Like, I mean, it was nothing.
We're going for the moon.
I mean, every time it dips, it's like, okay, is that all it's going to do? And it's like, sure enough, man, geez, that's all it's going to do. I mean, speaking of that, so gold is basically just held, but it's high. I can kind of run over those real quick. But Bitcoin, yeah, roared right back. Roared right back here. Let me just talk about this for a second. The global boost, the boosty, of course, up a bit today as well. But here we go. Yeah, global boost up 3%. 3% on the day. 70,735. Everybody knows this thing's going to 100,000. We're not financial advisors, and because they're zero and all that stuff. So I don't think so, guys. I don't think so. Ethereum up nearly 2% here. 35.72, over 2%. Just had to toggle there for a minute. Solana, it just doesn't really matter if that chain works or not.
When you have enough popular people and enough money, you can make it happen.
Doesn't matter. Works, doesn't work. Stuff gets stuck, doesn't get stuck. You can't do arbitrage, you can't do transactions. Doesn't matter. Everyone loves Solana. Even me. I do too. I love Solana too.
Yeah.
Yeah. I wish I'd loved it before when it was $11 and we were thinking about opening up a 10x position on it. But, yeah, you can't win them all, right? And that wasn't long ago, by the way.
No, like 3 months.
XRP up a bit, edging up. This one is going to move like nobody's business. And I'm not going to go over these too much. I know Matt's going to dig into a lot of this stuff. Although I think he might talk more about the macro and economics. But look at this. Han Coin is up 47% in the top 100, up 47% on the week. Han Coin. I wonder what a they has to say about that. Right? We're going to find out. Doggy Coin, the Doge Coin, up 10% on the week. It's back over 20 or flirting with 20 here once this toggles. Yeah, just about. Lots of good stuff. The market is looking pretty nice. I mean, it's not for the faint of heart. I will say that, but it is doing pretty well. Let's bring on our main man here, Matt Dixon. Sir Matt the Great, how are you?
Hi, morning. I'm good, thank you. Morning, David. Bruce, how are you doing?
Doing pretty
Faring
good, man.
well.
It's good to be here in Paris around so many smart people that are doing stuff. It's a lot of fun, and of course, the after parties and stuff aren't bad either. You know, the money's flowing back into space, which is nice.
Yeah, we have plenty of that in Dubai, but the weather's not quite as nice. It's getting very hot again now. Summer's here, so
It's hot, right? I know. It's so nice here. So I spoke about it a couple of times, a little whatever with my Airbnb, my first one. And so I had to kind of move around. And so I'm over in the Moulin Rouge area, which is cool. But it's a little bit of a walk here. It's not bad. But the weather is so nice. I don't mind the walk. You know, it's
nice.
just so nice. It's like everything about France right now. Paris is nice, let me tell you. Anyway, good stuff.
Anyway, yeah, I've jumped into my screen share, and I'm just sharing US interest rates. Can you see that? Well, sorry, not US
We,
interest rates, US inflation.
yeah, look at that.
Yeah. So
What is this? This is by the year. Okay. Uh-huh.
Yeah, so I'm looking at the monthly changes in inflation out of the US.
Okay.
So we can see yesterday it ticked up to 3.5%. There was a big knee-jerk reaction yesterday, so the markets really tanked heavily on the news when it came out because we were expecting, if anything, slightly lower inflation, and it came out higher. So the big knee-jerk is that the Fed are not going to be able to lower rates as they had promised and possibly even planned from June onwards. That's very, very unlikely to happen now because inflation came out stronger. But I would say it was a little bit of a knee-jerk, a bit of an overreaction possibly, because the markets really tanked heavily, crypto markets and everything. But then after that, and we got the Fed minutes released later, I think just sort of calmed the water a little bit. And we've seen things bounce back quite well. So we saw quite a big dip on virtually everything yesterday. Apart from, we did see a massive spike in the US dollar. So I'll come back to this chart, but just very quickly jump onto the US dollar. So if we go onto the 4-hour of the US dollar and just expand that out so you can see what actually happened yesterday. And you can begin to see that big green candle there. That was the response from yesterday. This green candle here, massive green candle, bigger than that's there, was the response from yesterday's higher than expected inflation figures. So the reason that happens, a couple of people have asked, obviously, if inflation is higher than expected, then there's upward pressure on interest rates. So that means that the US dollar is the asset of choice where people are basically depositing to try to receive a higher rate of interest on their money. And so money flows into the US dollar, and so the US dollar pumped on that. And it's normally not good because money flows out of risk assets into these things like treasuries and so on. And you get the price pumping of the US dollar here. So that wasn't good yesterday for risk assets, but they have managed to recover. And crypto has recovered really well, particularly Bitcoin, as David was just saying moments ago. And we'll jump over to Bitcoin. I mean, back above 70,000. So we got this spike down yesterday, and that was pretty well expected. I think we were talking about that even in the show before it happened yesterday, saying that basically we were in a consolidation here. Possibly this is some kind of wedge pattern at least. And then from the wedge, you'd expect probably a break to the upside. And so far, that is exactly what's happening. So we got the push down yesterday on the higher than expected inflation. That pushed the Bitcoin price, among other risk assets. These red candles were pushed down, so the price was pushed down. And you can see it didn't stay down for long, and we got the Fed chair and the minutes being released yesterday, the FOMC minutes, and the market decided that maybe it's not quite as bad as they thought. So we'll probably come back to Bitcoin, but I will just go on to our previous slide that we had here, looking at inflation, the inflation rate in the US. So obviously this is the big worry that people have. If inflation gets out of control, then they cannot lower interest rates. And if the economy does begin to slow, and whilst they still have inflation, then you have this terrible thing called stagflation, where you potentially have stagnant growth because the high interest rates are hitting the growth. and yet because you have high inflation, you cannot lower the interest rates to stimulate growth. So it's a really difficult situation for the Fed to be in. And it is actually a very difficult job that they have, because when they try to stimulate the economy, so for example, we had the COVID crisis back around 2020, and they printed all this money, crazy amounts of money printing, and also from the 2008-9 financial crash, they were printing money. Now, these were kind of experimental policies to try to stimulate the economy quickly, to put money into the economy, to try to get business moving yet again, keep everything going. But it was experimental. And the thing is, with these kind of stimuli, when you do a stimulus, it can take the form in different forms. So you can have it, looking at the bottom here, you can have it in the form of tax cuts, which basically, it's a very quick way of stimulating the economy because it puts more money in people's pockets straight away. And very often when you have tax cuts, it just allows people to spend more. When they spend more, if the economy is in recession, not a lot of manufacturing, etc. When they spend more, consumption going up, manufacturing needs to pick up to meet the demand. If you're spending more money on goods, it means there's a greater demand for goods. So manufacturers need to manufacture more to meet that demand. So tax cuts are a really good way, a very direct way of getting money into the economy. And that brings us, we'll carry on those, but that brings us to the multiplier effect. There's different ways of stimulating the economy, and they have different effects. So tax cuts are actually quite a good way of stimulating the economy. And they've been proven over and over again by economists to work very well and quite directly. And there's not too much of a lag effect, because a big problem with a lot of these things. So for example, if we looked at interest rates, they can manipulate interest rates to effectively manage the amount of money in the economy. If there's a very low rate of interest, then people can borrow money easily. They can borrow money on their credit cards. Businesses can borrow easily to invest in their business. It means there's a lot of money flowing around in the economy. So lowering interest rates does have a positive effect, but it has a much longer lag effect than tax cuts, for example. So lowering interest rates can be a good way to try to manage the economy, but it has, a long lag effect. And the lag can be up to 18 months for these things. So when the Fed makes a change in interest rates, it doesn't actually have an immediate effect on the economy. The markets factor it in immediately because the markets are forward-looking and they actually anticipate what the economy is going to do because interest rates were changed. So interest rates are a useful tool, but again, there can be a long delay and they don't know how much effect it will have. And then money supply, QE spending, obviously if they're spending a lot of money on infrastructure, that has a good immediate effect because it puts more people into work. If they're building roads, building bridges, I heard something the other day about the bridge that collapsed, a ship hit it in America. And someone said there's so many bridges across America. Well, actually, it's not a bad way to stimulate the economy if they decide to rebuild all the bridges in America. It sounds as though it's wasteful, but it actually puts a lot of people to work, puts a lot of people in work, gives people a lot of money, a lot of extra money to spend, and actually is quite a good way to stimulate the economy by spending. And that's another reason why they spend on armaments and they promote war around the world, is because they sell all their armaments. It means there's a lot of profits to be made out of it. There's also a lot of employment effect, which, obviously the use of those arms is a terrible thing, but actually in terms of business, from a business point of view, it's a good way to spend money and stimulate the economy. And then QE is most probably, economists have looked into this in quite some detail, and they've said that QE, quantitative easing, which is effectively printing money, just in simple terms, is probably one of the least effective ways to stimulate the economy because it doesn't necessarily go into extra spending. Very often QE goes into risk assets, so into things that people just effectively like deposit the money, or they put it into risk assets, into shares. They might buy property, they might even buy cryptocurrency, but all these things don't necessarily have an immediately positive effect on the economy. They don't necessarily stimulate employment, and that's what you really want. You want to grow economic production, to grow employment, which keeps the economy really healthy, keeps everybody happy because they have money to spend, etc. So QE is probably the worst of these. It possibly has a bigger lag effect than any of the others, and it actually has less of a multiplier effect. So there's a multiplier effect. You can measure the effectiveness of these different policies in stimulating the economy. And quantitative easing, printing money, is probably the least effective, and it's also the least known effect because it is an experimental policy. It was only started by Japan in about 2000, America and the rest of the world 2008-9, then again in COVID. But they still don't know the real long-term effects of QE, quantitative easing. And I would suspect that all the money that's being created through QE is basically the reason why these high interest rates are not managing to slow the economy as of yet. So the economy, particularly the US economy, is still actually quite buoyant, and yet they've got high interest rates, and they're actually now beginning to talk about these high interest rates for longer, or maybe even some are saying maybe they'll have to raise interest rates to try to keep the economy in check. And so this is all kind of experimental policy, which isn't the way that you want your economy to be run. You don't want to be running by experiment. And it is experimental. They don't know the effects. They don't know the delay or the lag effect. They don't know the multiplier effect. All the variables they don't really know. It's just a big experiment. And at the moment, it's not going particularly well because we're having problems now with inflation. This happened back in the 70s and 80s, where inflation picked up, they raised interest rates, then inflation started to drop, they lowered interest rates, and then inflation absolutely took off. And that's what people are afraid of. And that's why yesterday, when we got these slightly higher than expected inflation figures, are thinking, oh no, it's taking off. But put it into context, you can see the move here in this last little bit of the chart. You can see the move in inflation was the step up in inflation it's worrying, but in context is not particularly important, I don't think, at the moment. I think the Fed can afford maybe just to look at what the effects are. They're most worried about, they don't want to be raising rates because they're a bit worried, I think, about slowing the economy too much. These are the times when recessions potentially are started, when they actually overdo policy and try to maybe slow the economy too much by raising interest rates too much, and that would be a mechanism of slowing the economy, then that's what causes recession. So I think the Fed are being very, very cautious. They do not want to see recession, especially in this election year. So that's just a little bit of sort of background.
Especially in the election year.
Yeah, a little bit of background there about the economy. So we saw yesterday, going to Bitcoin again, that we'll go back to a more usable time frame for us.
That was a pretty chart, though. Wow.
Yeah, actually, I mean, we'll just look at it very briefly again, because it just shows us what Bitcoin has actually done, doesn't it?
Yeah.
And that's what you call
There you go.
impulsive. That is what you call an impulsive move. So, strong green candles here. The impulsive direction is clearly to the upside. There's no reason to suspect that will change as yet. I'll just get rid of all of these labels at the minute, just so you can see it more clearly. I'll remove the 18 drawings. So this is a very interesting candle. It's actually probably quite good that we scrolled out here onto the monthly, because when you see something on the monthly, you're looking at the long-term picture. It's a much more powerful picture than when you look at the 4 hour. There's a lot more noise, as they call it, in a shorter time frame. So if you look at, from monthly, it's really giving you a solid picture. Then you go weekly, daily, 4 hourly, 15 minutes and so on, going down the time scale. And there's more and more noise, and you can actually deduce less and less the shorter time frame you go. So when you look at monthly, it's giving you much more of a zoomed out picture, so you can see from a distance what's actually happening. When you're too close, you can't actually see the wood for the trees, as it were. So here on the monthly, we see these massive green candles here. We appear to have had from the bottom some kind of wave 1 up, 2 down. Maybe this is a wave 3 up. Maybe the wave 3 isn't even complete as yet. So if we put a Fibonacci measuring tool on there, on what appears to be some kind of wave 1 at the bottom there, and then I'll just transpose that to there, we can see that we've already surpassed this Fibonacci. So the different Fibonacci levels, the minimum you expect for a wave 3 is 1.618. Now we flew straight through that. You can see here this massive green candle that we saw that happened, basically it's from February 24, so it's recent. Massive move, this massive green candle, and this is all off the back of the Bitcoin ETF approval, really. So massive green candle there, flew through 1.618. The next real stopping point potentially will be 2.618. That's the next Fibonacci extension after 1.618. It will be 2.618. Once again, we flew through there right up to 3 times, which is not so important. Then we got a bit of a pullback. But what's important is what's happening with this candle, especially if it finishes as a green candle. Then we would have a real, what's called a hammer, a bullish hammer candlestick. And that would be extremely bullish for Bitcoin and would tell us that we're likely to push quite a bit higher. And the next target, 3.618, by the way, isn't actually a Fibonacci number, but it is still an extension that prices often go to. So if it were to go to there, that's 84,000. I've looked at some other extensions within, somewhere 82, 84,000 might well be expected to be the next place that Bitcoin takes a pause, possibly before just moving even higher again. But if this is a wave 3, Bitcoin and cryptocurrencies tend to be highly volatile, and they tend to often go to the larger extensions that you see on the Fibonacci scale. And the next major extension level is 4.236. That's this level here. Now the 4.236, if that were the end of wave 3, that would take us to $94,500, $94,505 on Bitcoin, or 94. We've got it here, $94,594. So 94,000 basically. That is a real strong potential target. We may get a bit of a pullback from the early 80s, but I think this could well be a good target for the third wave. And we could even go beyond there because there are extensions that go beyond 4.236. We don't normally see them in traditional finance, but in crypto, they're actually reasonably common because crypto is still an emerging asset with such potential. So that just shows there's a lot of upward potential when we zoom out and look at what the picture really is. And if we looked at, just again, I'll put another Fibonacci measurement here on this whole movement we had to the previous all-time high of 69,000 odd from the bottom, roughly the bottom there. It's low down. I think that was the when was that? That was just around COVID was here, wasn't it? That was COVID crisis. So anyway, around those low levels at that point, we'll scroll on to here, and again we can see if the big move here was a wave 1. And this is a wave 2 pullback, then wave 3 would take us absolutely sky high on Bitcoin. 1.618 would take us to 122,000. 2.618 would take us to 188,000. And then if we got to 4.236, that would take us right up here to 295,000. These sound crazy at the moment, but when you think that Bitcoin came from effectively nothing to $70,000, then to go to what we just mentioned, that figure there of 296,000 is actually not at all unreasonable. It's only 4 times, is it? 4 times, somewhere around 4 times where we are now.
Nothing for crypto. This is like normal stuff.
Yeah, so perfectly possible, and especially if we do see financial crisis coming sometime in 2024. We saw yesterday, we saw during the banking crisis earlier in last year, in fact, that actually during the banking crisis, you would have expected Bitcoin to crash like other risk assets, but it didn't. Money flowed into Bitcoin. And so it is beginning to move from, it's actually got a dual status, as we mentioned yesterday. It is a risk asset, which has massive upside potential, but at the same time, it's a store of value. So it's a dual characteristic, and it's evolving, I think, from being a risk asset towards being digital gold, that's store of value. And it's an evolution that is ongoing, taking place. And I think when we see real turmoil in the financial markets, I think Bitcoin will mature completely as a store of value. So I think these upside potentials, 290 odd thousand, are not at all unreasonable to think of a possibility at least. But what we want to do, or what I normally do as a trader, try to trade what's immediately in front of me. And by looking at this on the monthly, what's immediately ahead looks to be upside, because these are solid green candles telling us the impulsive direction is to the upside. This looks like it's going to be to end the month as a hammer candlestick, which would be very bullish, and then we'd expect to continue to the upside. So I'm very bullish based on that chart. And we'll go back to 4-hour chart, which is, again, what's kind of more immediately in front of us. And we can see from that yes, we're having a little bit of a pullback. We can see the low yesterday, 67,000 low yesterday, and we pumped up to 70. We actually took 71 and a bit thousand. We're down at 70,500 right now. I say down at. That's still within touching distance of new all-time high yet again on Bitcoin. And we can see, we talked about this consolidation yesterday. It may or may not be over. We may just dip down once again before we break to the upside properly. But this looks very clearly like consolidation. Unlike this impulsive move here, which is solidly upward, this is kind of sideways corrective. And so at some point, whether it's from here or from a bit lower, we don't know. But I think we're going to soon get new all-time highs on Bitcoin, and that should translate to other cryptocurrencies. So we mentioned XRP. XRP is one of those cryptos which is in the spotlight still with the SEC. And I think, again, it could explode higher, especially if we get some resolution from the SEC. So the SEC, talking of them, we had news out yesterday that they're taking aim now at Uniswap, the decentralized exchange of Uniswap.
They're just not stopping. You know, we were just talking about this the other day. Like, there's well, at least there's Uniswap, because of course the walls are closing in on everybody. So yeah, now they're going to go after Uniswap. Of course they are. These communists.
Yeah, they've got the site set on Coinbase. They've got the site set on XRP. They've got the site set now on Uniswap. And Uniswap fell 16% yesterday. You can see the red candles here. Yesterday, I'll go on to daily so we can just see what happened. Look at that. Look at those red candles that we saw to the downside. And that's all because, well, I say all, largely because of the SEC taking aim now at Uniswap. That's what caused the recent push down. And yeah, it's not an ideal situation that they're firing off in all directions now, attacking crypto in so many different ways. So I don't know if this is the right way to do it. I think they should be looking at sensible regulation rather than just taking aim and pot shots at people. Don't know quite what their aim is.
It's basically they're taking aim at anybody that they think has enough money to make it interesting. That's, I mean, let's just call a spade a spade. I mean, it's very obvious to anybody all around the world. They're going after places that have enough money that they can get a big payout.
And we've heard them talk about Ethereum, taking aim at Ethereum. I mean, saying it's a security now that it's a proof of stake asset. They're saying it's a security, and so are so many other cryptos associated with it. Most of the crypto are still they're still actually on the Ethereum blockchain. So if they were to get secure an action against Ethereum, that could be quite problematic in general. But I don't think people are going to accept it at some point. They're just not going to accept what the SEC are doing, and I think they're actually weakening their position by taking such a scattergun approach at all crypto. That's what they appear to be doing. So,
yep.
Just jumping to gold again. Gold is that hedge against inflation. Look at us. We're still at or near all-time highs. The price today is actually higher yet again today, up 0.15%. So we've got a little bit of a pullback, but again, we're pushing up. Look as though we're going to be pushing up. And if we scroll out on that, if I were to move to weekly or something, we can actually see I've got a target anyway, quite well above where we are. I've mentioned this the other day, that we're at 2,334, I think, right now, or 2,336, sorry, right now. Next target for a wave 3, looking at Fibonacci extension, would probably be around this 2,500 area. So I do think there's definitely more upside to be had with gold.
For
and again,
sure.
with oil,
Gold is going nuts. It's going to continue to go nuts, I think. And yeah, look at the oil, right?
yeah, let's just look at gold on the monthly, like we did with Bitcoin.
Woo.
Again, see
So pretty.
we can see how, and basically this is just the end of a wave 3. I just told you about a target of 2005. That would be just the end of the wave 3 in red. So we have wave 1, wave 2 in red, and then the wave 3 itself is made up of 5 waves in blue. So we have wave 1 in blue, 2 in blue, 3 in blue, 4 in blue, and we're working on the 5th wave. It could go here, it could even go beyond there. 5th waves in gold, by the way, are often highly extended waves. So a little bit like crypto. Crypto often has a 5th wave extension. Gold seems to, I mean, we've been following gold for much longer, of course, but gold often has a 5th wave extension. So we could well see it go way beyond here. But this, even at 2005, is only a wave 3 in blue, sorry, wave 3 in red. We would expect some kind of pullback in wave 4. Then a wave 5 would take us once again to brand new all-time highs, even above that 2,500. So the outlook, long-term outlook for gold is very, very bullish.
Yep.
Here we have the DXY. Again, we saw that it's pushed up yesterday, as we said, because we're on the weekly there. We'll go back to the 4-hour. We saw the massive push up there yesterday, as I say, with the DXY. So that is a little bit concerning at the moment. We don't really want to see much higher dollar right now because it does put a dampener on risk assets. And that's probably what's just been pulling Bitcoin back a little bit just now. We can see a bit of a pullback here on Bitcoin, and that's probably because we're seeing a little bit further of a push up in the dollar index. We're seeing the dollar index here pushing up yet again. And this is forming a hammer candlestick, which is actually bullish. So not what we really want to see at the moment. We don't want to see too much more dollar strength right now. Solana, we'll just take a very quick look at Solana. Again, let's just scroll out a little bit to try and get some perspective on this. But it's not a lot different to what we did expect. It may have already bottomed out because we got a low yesterday, which actually equaled the low on this A wave here. You can see if I put the line on, I'll just draw that line so you can see it properly. Horizontal ray from the previous low there. You can see we precisely met it yesterday here. And that could well be a good floor as a good support. So that was a pivot support there, right back, March, back in March, and we're now well into April, and you can see we just retested that low there. So it just shows how these pivot supports are very important, and you can use them for trading to manage your risk reward. If you see that kind of thing, and you saw price spike down to it, you can actually put in a long trade with a stop loss just below this support, and you'd have already been in really nice profit. So these supports are really useful to keep an eye out for them. So potentially we may have already hit this C wave. This C wave could be complete here already. I had it labeled just a fraction lower, neither here nor there in percentage terms. So we may have already completed it. So we may already be on the push to the upside. So if this is corrective ABC, it means we have an impulse to the upside in the direction of this arrow, which would take us much higher. Bearing in mind that there's likely to be a fix for the congestion problems within Solana. I know what you were joking about. It's still going up, and who cares if it
doesn't matter. It works, doesn't work, doesn't matter. It's still going to the moon.
And it's still going according to the charts, which is amazing.
Yeah.
We expected this, and it's just happening exactly as you would expect from a chart point of view. So these are corrective waves down. This overlaps this previous wave. It's all overlapping, so I would expect some upside to exceed this previous local high of 209-ish on Solana. So that's positive. Dupe, the exchange, the Solana exchange DEX, is basically in positive territory. So unlike Uniswap, the Dupe is actually in positive territory. In general, just a quick sweep to finalize, the meme coins are generally down. So your Doge is actually down for the day. It's just below the 20 cents, 19.7.
I mean, if 20 cents is the new floor. That's just crazy. It's like Bitcoin being 70,000. I'm like, wow. Okay.
I agree.
Okay.
So it's down 1% for the day, but that's nothing for a minute. For Doge, that's absolutely nothing. Book of memes down 2.7%.
And it also matters on what obviously what time zone you're on. On my computer, my computer is still set for U.S. time zone. It's up almost 6%, 5.78%.
Yeah, I mean, it got a really good bounce from the lows of yesterday. So that's positive. S&P 500, actually, it's a little bit worrying, to be honest, the S&P, because we did actually dip below that support. And you remember I say when it dips below a support line or above a resistance, like here, for example, when it dips below and retests it, then you expect the most likely movement is a continuation, because it broke support here. It retested what then became resistant to what was support. Once you break through it, then becomes resistant to an upward move. And we bounced off that and we're pushing down again. So that's a little bit worrying short term for S&P. Just wondering, we could potentially have topped already, bearing in mind that's what's happened. But we'll see if it, maybe look on a longer time frame. The daily didn't really finish much below it, and we'll see what happens today. So far, the futures are telling us it's gonna open lower, but we'll see.
That's what it looks like, right? The Dow futures were down about 100 points at the start of the show.
Yeah, so they had quite a down day yesterday as well. Yeah,
and they were down 400 points, over 400 points yesterday as it closed. Yeah.
Right, yeah. So they're both down about 1%. The S&P and the Dow were down about 1% yesterday, and that was just off the back of this. It happened immediately. Those inflation figures were released. The markets tanked, and that's because everyone was thinking the Fed knows what they're doing, and and people now begin to question. But I still believe they must know things that we don't know. They must actually believe, if you think about what's happening, they must actually believe that the US economy is in a bit of trouble, and that's why they're not.
Yes. I think there's no doubt about it. Absolutely. That they and I would tend to agree.
Yeah. And just a couple of others that we normally touch on. We've got Litecoin here. Let me go back to a more reasonable time frame, 4 hour perhaps. Litecoin, you can still see I've got that consolidation I just scribbled on, just showing it's still in very much a sort of sideways consolidation. We may even have a touch lower to go to complete this consolidation, but it is a consolidation, meaning against the trend. And I think the trend is still very clearly to the upside. So I do think following completion of this, whether it's already complete or whether we have a touch lower to go, I don't know. But I think we're expecting some further upside to come. Take us, the next target would be 120 to 129. We could even smash through that as well as further targets higher up. And it just depends which fib extension you go to. But the only thing I would say is a kind of little slight warning. This does appear that the triangle interpretation was correct that we had earlier on, that we did talk about and said we're going to thrust higher from the triangle. That's precisely what happened. We thrust higher from the triangle. And I think if the triangle was an X wave, as we have labeled here, then the Y wave is made up of 3 waves itself. It's actually made up here of a WXY. So we have here A wave, the B wave, and we have basically working on the C wave to complete the Y. So actually, one more push higher will complete a Y wave. That would actually complete a larger WXY and would tell us then that there may well be some downside to come. So I think that most of the markets, including Bitcoin, will push higher, but I think we then will get a pullback before we then have any potential to push higher again. So like Bitcoin is in a bit of a wedge shape here, probably some kind of wave 4 wedge, which we break out to the upside. I don't doubt that we'll break out to the upside at some point and we'll get new all-time highs for Bitcoin. But I think then we do get quite a good pullback before any potential for further upside. So again, you need to trade what's immediately in front of you, just to be on the safe side. And of course, Ethereum, second in the market at the moment by market cap. Very, very popular cryptocurrency. Once again, it appears to be in some kind of consolidation phase. It can continue to even move down to complete a consolidation. But again, because this is some kind of consolidation, it could even be an A, B, C, so we could have lower to go. We still, I think, have higher to go with Ethereum above these previous local highs of 4,000-ish. So all in all, I think the markets will push higher, but we're in a choppy phase at the moment, and there's a lot of uncertainty with interest rates and with inflation and all this turmoil in the US at the moment with the economy. So that's pretty much a wrap for today.
Well, excellent report as well. Always a pleasure. We also, of course, have the whole war situation. I mean, one of the U.S. generals is now in Israel or en route. Usually when they say en route, he's already there, though. And so he is going to coordinate or help coordinate the response to Iran. And, all of us just want Iran to, take it on the chin, I guess. Just let it go. We don't want to see more war. But God knows, man, if they do send in, which is expected, some drones and some missiles and everything else, that's going to be a heavy-handed response. You can bet, from Israel and from the U.S. They're gonna, I think they're gonna let them fly. That seems to be the writing on the wall. And then, of course, this massive draft as well in the Ukraine and Russia. So all that on the brink. I know, as you say, those types of things tend to help the economy, unfortunately, you could say. But all that stuff in building bridges and roads and everything, you're absolutely correct. It does help the economy, and gives us nicer stuff, nicer highways, nicer bridges, everything else. So
it's actually strange that war isn't necessarily always bad for the economy. You'd think it would be, because it's all about destruction. But actually, there's a very famous economist called, I think his name's Schumpeter, or something like that, Schumpeter. He talked about creative destruction. Creative destruction is basically when destruction is required to spawn new creation. You need destruction for new creation. And it's actually seen as a positive thing that you're basically clearing the decks, clearing away the old for the new, and all the work and advancement, etc. So this, I suppose, is why people without any empathy for the actual ordinary people on the ground, they just see the big picture of the economy, and it's not good for the ordinary people, I guess.
Yes. Yeah. So we're going to see, we'll see more of that as well. This has been, and we'll start to roll off more and more of the interviews as they come through, but it has been a massively good run here. So we'll do some more of this stuff, do more Impact Live or Impact Money shows from some different conferences as well. One of the reasons I was asking about Token 2049 with you guys, they say they're sold out. I mean, I'm sure we can work our way in there, but it wasn't on my radar. So usually you have to start setting up some good partnership stuff.
They'll squeeze you guys in, I'm sure.
I'm sure. Well, always a pleasure, guys. Another great show. I will be in and out. We'll be finishing up here in Paris for our show tomorrow, and we will see you then.
Great stuff. Thanks, David. Thanks, Bruce. Thank you, everybody. Catch up soon.
Cheers.
Stay tuned to stay lucrative.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.
It's an amazing community, and I talk about it around the world, and I'll say it again now, guys. We are the most powerful community in the world. Thank you, Bruce.
What we have here is a monetary revolution, and it's a peaceful revolution.
And it's not just crypto, but
everything.
Where if we don't free ourselves with a decentralized, permissionless blockchain, they're going to imprison us with a centralized, permissioned one. We have to do something. And if we don't do something, they're doing things. But we're saying, we're going to hodl. We got to give some of those things we're hodling to the politicians so they like us.
And it's been going on for over a decade now.
I want to build a future we're all inspired to live in. We understand the impact that we have on our planet
and make sure that that's part of how we cost things on the immutable ledger of the blockchain. Blockchain is a way we make the world we want to live in accountable to the future generations that are right now going to be dependent on us making sure this planet's around for them to enjoy.